Okay, I think I'm live. I think I am. But, let's see. View channel, I am live. I guess that's me. Wah, wah, wah. Hit that thumbs up button. Just remember, hit the thumbs up button. We're going to go over here, but I got to claim it back. Okay. And default. I got so many social requests yesterday. You would think it's a new year with new listeners. Morning, Joe. Hey, Joe, congrats on the business launch. I like the page. Yeah, Mara. Ooh-wee. It's down at 21 right now. I think you're probably, 21. You're getting that 50. If you hold the 50-day, we could see another leg up. But, ooh-wee. Let me make sure Mara's in. Yeah, it's in not owned. Okay. We're going to turn on Do Not Disturb. And Cleveland Cliffs is down under 20. Same thing as yesterday, man. Anything that was up is getting killed. Anything that was down is going up. Walmart's holding in there. Look at Walmart under the 200-day. Probably going to fill this gap back up to 169. Honest to God. It's a no-brainer at some point. It will. Yeah, I got to use Shopify. I got to start using Shopify for something. I just don't know what the hell I'm selling. I sell in the newsletter, but I don't need Shopify for that. Listen, Substack takes a big enough cut of that. I think it's like 30% they take from me. Okay, we're going to go over here. Yeah, I was going to say, I did a different thumbnail yesterday. We're going to do some scans. And I do want to include something, what I want to do first. Morning, Chris. Let's see. Dow stocks under the 200-day. That's what I want to do. I know I have a look here. I know I have a scan. Here we go. Stocks under the 200-day. Let's see. Core portfolio under the 200-day. That's probably even better. Disney is the only one. This scan's taking a little time. But here's the thing. If we're going to have a rotation, morning, Mike, you kind of want to look at, and yesterday was clear. I pulled this up, and my note is, ooh, it's ugly. But it's not super ugly. It's just what was down is up, and what was up is down. So I don't think that it's, horrible per se. Look at Berkshire up 1.63. Look at Exxon up 2%. Look at United Health up 2%. Cigna up 3%. CVS up. AMZN. AT&T, Verizon. Netflix is down 3%. Apple's down 3%. Nvidia down. So it looks ugly, but this may be what the broadening looks like, is that those 7 stocks and the big movers just are look, Shopify's under the 200-day in the daily, but that one was way up last year. Bank of America under its 200-day, but it was way up at the last part. So let me just do Dow stocks under the 200-day. Probably should do S&P 100. Yeah, I mean, it was, Chris, 100% right. Anybody that's bitching about losing money yesterday doesn't pull back and look at a weekly chart as to how much money they made in November and December, or they weren't, I lost 6 figures yesterday. Nah. I was up more than 6 figures in November and December. But a lot of that was because Apple's continuing its slide. And I'll take a look at Apple. Let's see. Dow under J&J. Nike is still under its 200-day. 3M, Disney, Verizon, Walgreens Boots. This has been one that's kind of turned around a little bit. Shockingly to me, I didn't expect this. Morning, Nevin. I wouldn't have expected that. Verizon, slow and steady. I mean, slow and steady. It's probably going back. I would say you hit 42. I mean, 42 is not crazy to think on this stock. It's a solid stock. Nothing super wrong with it. Eli Lilly, back up to 600 probably. NVIDIA, NVIDIA is going to go back to there's wave 1, wave 2. Do we get a wave 3 that takes it even higher? But you can see that we're still in an upward trend on the daily. So, yeah, and I got a ton of feedback yesterday. People asking me to look at stocks and stuff. So, let's just run the scans, the regular scans, see if anything. I mean, it was such a bearish day that some of the beaten down ones may have a cross up, but let's see. I had yesterday 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 people asked me to look at things for today. So it's going to be a long show. I went hiking yesterday. Full disclosure, I went hiking yesterday. Did about 8 miles, I think. What kills me is here in Georgia, you go 8 miles, but you only get 1,100 feet of elevation in those 8 miles. So it's not a crazy, like people in Denver and people in Colorado. You go 8 miles, man, you're getting like 4,000 or 5,000 feet in elevation. Even New Hampshire, up in those White Mountains. Ooh, look at that. XOM. We have a cross up here on XOM. Still don't think it's a good stock to buy, but it's a good stock to trade. You have the confirmation on it. But, oil's down today. Let's see about brokerage holdings. I got to probably change my brokerage holdings because I sold out of a bunch of stuff. I haven't updated this list. Look at Uber down at 57. I'm still not out of Uber. I'm just going to add more. This pullback doesn't mean that I get out. It just means I'm going to add more. And I'll add more when they have confirmation, when they signal a trigger in the algorithm, and stocks that I have on my watch list. I need to put together a watch list. I don't think we're done going down. I think this entire week will probably be down. I don't think you see a face-ripping rally like we saw in November and December again. until the second half. I think, we've pulled a lot. It's clear that I think we've pulled a lot forward. And I think in the PXD, I mean, do I include PXD? Might as well. I mean, PXD just is going to trade with Exxon. The fundamentals of PXD are not trading on their own. They're just going to... Oh, SARK. We have confirmation and probably a gap fill up to 28. But beware. Yeah, that Bitcoin ETF announcement is going to send that ARK fund. Low cost Vanguard. Happy New Year, Larry. Happy New Year. Spider. Yeah, I think over the bull market, my show. Oh, look at this. Look at this. BITO. AbbVie. Cigna. Thermo Fisher. FTX. FTX is going to go back to filling that gap, I think. But we don't have cap confirmation. So, but we do have the start of a cross-up, so it could go back there. Cigna, we had a big gap. We have a big gap down. But this one, I mean, just look at the long term of Cigna. That's a pretty solid, I mean, if we just do a channel here, and we'll go just after it recovered in COVID. Let's go to September, the September lows. We'll do that, probably a channel, and then probably that. You're probably looking at that being a pretty good channel there. So you've got, oh, come on. Why are you not letting, oh, I may have to log out of, yeah, let me log out of this. Let me see, maybe I don't necessarily need to log out, but oh, okay, I can do it. No. Escape. We're going to go from here. 23% up. Interesting. Let's get back to the scanner. And that was not owned. So now I go to the Dow. Wah, wah, wah. I should probably be scanning some of the Russell smaller ones too. Since, again, kind of the year of the small caps. Nothing in the Dow. Interesting. Let's go to NASDAQ. I would be hard pressed to think that anything in the NASDAQ. Oh, look at this. BIIB. I don't want to include that one. ADP. This one might be a good rebound play. O'Reilly we talked about. Excel Energy. This one has just been, it's been a solid one, but don't like it too much. Don't ask me why. S&P 100. Morning, Mark. CVS. Oof, look at that run. Wow. Look at that run. I still don't like CVS, but MetLife. American Tower. We talked about that one having a little bit of a rebound, because if you look at the long term on this one, it's not even at its 200-day. Citi, solid stock here. I mean, look at that. That has been just this is the recovery under Jane Wells. October, 40%. I gotta get rid of this. We don't want that font size. We want that font size. And there we go. That's a good one. NEE, Nexera Energy. TMO we talked about. Exxon we talked about. Bristol Myers. Still don't like that one. Yeah, Team is a good one. Yeah, I'm done. Let's look at Team. So here is, let's get back to the 4 hour, which is right here. So Team, you're in at 175. It's at 226, but you've got that button hook. We talk about that button hook all the time. Your Bollinger Bands are cinching up, and it's so when your Bollinger Bands cinch up like this, see how they expanded? It's the shaded blue area. But see how they expand and then they cinch up? That indicates that a move is coming. And it's clear that a move was coming as they cinch up. But since you're down on the downside of the 9-day, I would indicate that the move is downward. Now, if we look at Team, I think it's an expensive, it's software. So it's, it's not making money. Forward PE is 76. It was down 4% yesterday. Performance for over a year is 74%. Your average target price is 228. You're trading at 226. So your most recent stuff, December, 238. Again, I think your top side on Team is limited at this point. So if you're trading it, I'd probably, either trim or get out. If you're kind of investing in it, I'd wait to get into it. I don't think there's any reason to load into this one right now. So hopefully that helps, Nevin. Let's go over to Seeking Alpha and we'll take a look at some of the, let's look at the quant and stuff. It's not too hard. Again, if you have the tools, if you have the tools, and remember, you don't need Trend-Spider. If your portfolio is a little bit smaller, use some free tools like Thinkorswim. My algorithm, the whole point of the algorithm, the whole point of Seeking Alpha is to pay for tools that save you time so you don't waste time, because time is pretty important. So, when you get sales on these tools, like you have a sale right now for Trend-Spider at under $400 for a year, get the tool, and I think it's $170, $180 for Seeking Alpha. So when you get these things on sale and you can get them for under $500 a year, it makes the two together. I think they make a perfect complement to be able to look at Team, Seeking Analyst, hold, buy. The valuation is where they ding it, but everything else seems good. You can see the analyst here sell in October. Let's look. Sell, hold, and hold in looks like November and October. Let's see how they did in November and October. That's sell, hold, and hold. And if we just assume that they told us in October, even, let's say they said sell at this point, right? If they sold sell at that point, you're still up 18%. You may have lost some money if you listen to that dude. By buying, you may have been down 10% and under the 200-day, you had the death cross. But it's clear in an upward trajectory market. Long-term, Team has been, beaten down. It's at its 200-day. 200-day is $221. It's probably where you're going to put in some type of thing. You can see the Bollinger Bands are cinched up here, and they're expanding now. But that RSI would scare me. at 68.70. But the MACD is very low. You can see it just ran too high here in 2021. That $400 price, it just ran too much. So that's my take on it. Let me look at my notes real quick. FinViz, Bitcoin pulling back. Disney board rates. Oh, let's look at Zim. Shipping rates. I have a thing about shipping rates, and I'm going to go to Seeking Alpha and look. But Zim has just been on a tear. I mean, just since December 14th, and it's got confirmation. This is one that's filling a gap up here to 1154. In pre-market, you're up 2% at 1150. You have another gap up here at 13, which needs to get filled. And you've got, reminders. Oh boy, I got a lot to do today. So yeah, Zim. Let me go over to Seeking Alpha and look at Zim. High risk performing badly. Look why. I mean, it's got horrible ratings. Yeah, we'll include this article, I think. I think this is a good article to include. I think that's a good article to include. Boom. Let's go over to home. Mega cap route in January is now consensus. Well, I gotta look at the dogs real quick. Yeah, this is a good article. I like this one. We'll include that one because I do think that's important. Again, with the yeah, this is good. Biggest movers today too. And I've got to do the Disney board thing. Let me see if Disney has the the news. Yeah. Okay, there we go. And that's good to know. Let's go back home. Okay. Inks multi-deal deal for Verizon gains as bank. Key bank shares upgrades. I need to start doing these analysis things for Seeking Alpha. Let's look at anything on the homepage of FinViz. Crude's up. Natural gas is up again. I mean, God, let's look at oil real quick. Since the algo got you in, Looks like here, December 14th, you're up 17%, and you have confirmation. If we pull this back here, do we have more upward movement from people holding? It looks like people cut their ties. Let's pull back here. You don't have much volume above this. You really don't have much volume above this to fuel a huge rally. So maybe that 50-day is just going to provide some resistance. See, you guys get this kind of stuff with being live on here. I'm not going to put that in the newsletter or anything. Apple downgrade causes it to dip 4%. I think you start adding when you're comfortable. Okay. We're going to move that up here. Okay. I mean, there's a lot of pullback. I mean, look at Simon Property Group is even SMCI, which was kind of up yesterday. Algorithm got you out. I still like it to get to 300. I'm still holding it. So I'm hoping this one turns into a long-term play. So, okay, hit the thumbs up button. I'm going to start this mofo. We're going to get out of here. We're going to, there's yesterday's. We've got a bunch, no links yet. Let me see. We've got this one. Wah, wah, wah. This is a good one. Strategy crushes it on Tesla. SPY, we could be heading to a 460 retest. Seeking alpha shipping rates. Disney board. The movers. And seeking alpha. And we'll do the heat map over here. Okay. And let's start off with QQQ. Okay, it's trading at $3.99. Let's look at a weekly real quick because I want to see how many people are still holding from when we hit the highs before at 408. And you can see, yeah, 369 may provide some type of, this is probably a good chart to do. That might be a good one. I think I may have just talked myself into this. Here, I'm going to download this. Why not? You know what? Indicates. Okay. Hold on one second. I will be right back, and I will get into this. I like that play, though. Okay. I like that play of SQQQ. Let's see. Let's see it on the... I think we got in last week, if I'm not mistaken. Yeah. Oh. Yeah. 13.16, 13.36. So you're up 6% over 7 days. Not bad. Not bad at all. Okay, so we'll start out with QQQ. On the weekly. Okay, we'll start this. Okay, I'm going to hit record. Good morning. It's Wednesday, the day after a bloody red day. Yeah, it was not a good day, and we'll go over that, but I did want to let people know I changed the pricing on the newsletter. Like I said I would. I think there were 2 or 3 people that got in before I changed the price. I think I changed it at like 11 o'clock last night. I said I was going to do it at 1 o'clock. I've been threatening this. I changed it. You can go and see what the pricing is. I still think it's a good deal, and the reason why I changed it, this is nothing more than protecting those customers who have signed up earlier. If you are a current newsletter subscriber, your price will not go up, whether you chose monthly, whether you chose yearly. Whatever you currently pay will continue to be the price that you've paid for as long as you continue the subscription. When you cancel the subscription, that's when you get the new pricing. So the early people get in. As I develop more of a content strategy and you can go back and look at things, that's where I'm kind of raising the price, because I do think the archives provide you some really good education, and I'm going to change some things around. I'm going to do some new things for some new subscribers in 2024. So I've got some plans for this. So I did update the pricing to reflect it's still a deal. Go and compare other places that charge you like $700 a year for charting. Jim Cramer charges you $700 a year for a texting service that just tells you when to get in, not why you're getting in, just when to get in. So I do think it's a good value, but I did want to tell people, hey, if you signed up, congratulations, you just saved money because I upped the price. So again, the value is there. Here is yesterday's heat map of the S&P. It looks ugly, definitely ugly. Everything that was up. Hold on. Why do I have to do this with you? Okay, come on. Now I have to edit this. Oh, well. It's just, this is the heat map. And again, what you see is the right-hand side with healthcare, all of the defensive stuff, energy, utilities, real estate, stuff that was down is up. Stuff that was up was down. And so what you're seeing is this article, I'll include this in the newsletter as well. Mega cap rout in January is now consensus. Bank of America. They are saying that, hey, the Magnificent Seven has had its run. It's going to be routed. Some of these things are, they give some really good insights and some additional plays like IVV, VOO, SPY, RSP, which is an equal weighted index. But this article is a good article. Read it. It's really good. But let's take a look at QQQ specifically. And yesterday I included this in the newsletter. We've lost confirmation. I mean, it is down. Right now you're down 0.7%. You're under 400 in pre-market on Qs. And the reason I do Qs is because this includes the Magnificent Seven. SPY does, it's a little bit weighted differently. I think the Qs are a little bit better. You should have exposure to the NASDAQ 100. Now, my algorithm makes you 24% over 24 months. If you just bought and held the Qs, you're up 0.6%. Your average win in the algorithm is 6%. You're not out, but you've lost confirmation. We talk about it a lot. We talk about button hooks. And this weekend's paid newsletter is going to include all of these terms that I use and kind of how I use them with charts to explain. But the button hook is a half a circle. And when you see that, it typically means that you can start to get out of things. Look at this button hook. This is a little bit of a button hook. On the downside, you can see there's an upward button hook right there, another half circle, and that gets you in. But the algorithm gets you out here. It hasn't gotten you out yet. It will get you out probably in the next day or two. And this is where I want to point out, you have to look at more time frames, because when we look at the weekly, we can see there's a volume shelf right here at about 369. That's where people who bought between this time, November 2021, and now, that's where the majority of people are sitting and holding. That will usually provide you some decent support. So I do think that 369 is probably the way to go. I think that's where we will start to see support. So where can you go? If you own the Qs and you want to make a little bit of money, you don't want to sell because you're in tax, go to SQQQ. This is a short, triple levered short of the NASDAQ. You won't get back all of the money that you have in your account, because your Qs should be significantly larger position than your SQQQ. But you can at least get some downside and protect your downside. So say you have $5,000 in QQQ and you don't want to sell QQQ. Well, maybe what you want to do is put a couple of $100 into SQQQ. Right now, the algorithm has you up about 6% here. You do have confirmation. This is a note from last week. When this came in December 26th, I put this in the newsletter. I said, wait for confirmation over the 9-day and be patient with these triple levered ETFs. Well, guess what? We got confirmation yesterday. Confirmation was slightly there. I still thought it was a little bit on December 29th. I didn't want to. Today you have confirmation. So at $14, where are you going to? Well, there's a pretty good volume shelf around here, around 16. So that might take us down to 369 on the Qs, but it might take us up to 16 here on SQQQ. I think it's a good play. In my mind, that's a solid play. So take a look at that heat map. Take a look at this article from MegaCap. Take a look at the charts. Again, go to the newsletter. And if you're not signed up with the newsletter, go over here, Linktree. The link is down below. You can see the link on the video right here. It's linktr.ee/dailystockpick. And it's the fourth one down, Daily Stock Pick newsletter right there. If you like the charts that I do and you like to get entries and exits, and we'll go over more of this, of what I mean, but this is my algorithm in TrendSpider, and I give it to you when you sign up for TrendSpider. So sign up for the newsletter, sign up for everything here on Linktree, you'll get it. And you know, again, in the newsletter, you'll have these. The biggest stock movers of the day. Why is this doing this to me? Right here is Bitcoin pulling back. You'll see biggest stock mover of the day, SOFI, Technologies, Bloomin' Brands, and more. You can read all about this, but I brought this up because SOFI is pulling back more than 4% after a downgrade from market perform to underperform. The financial technology company's price target was also lowered from 650. Prior was 750. But let's take a look at SOFI. This is one that I've said, hey, I think it's a $10 stock in a good market. This is at $8.93. It's down 7.93. See the button hook? It ran all the way from 6, starts getting the button hook. The algorithm doesn't have you out, but you've lost confirmation. If you're trading this one, you should have been out of this one yesterday. If you're trading this, you should have been out of this yesterday. You have to make sure that you're watching these charts. This will come up in one of our social requests, but you have to make sure that you're watching these charts if you're trading this. Yesterday, Bitcoin went a little bit nuts. In pre-market, it's down. MicroStrategy. Why do I say MasterStrategy? MicroStrategy was down yesterday. MicroStrategy was up yesterday. And Coin was down. This is an interesting one because those are two clear Bitcoin players. We can even look at Mara. Mara was down about 10%. Mara's at $20. It's down 10% today. Button hook. It's lost its confirmation. People asked me last week, is it too late to get into Mara at 28? I said I thought 30 might be a tipping point here. 30 was the tipping point. $30 was the tipping point. I'm still in Mara. I'm holding it. I will dollar cost average my way because I don't think Bitcoin's done. I think when that Bitcoin ETF starts to get announced, I think this one comes back up. My algorithm, by the way, makes you 33% in Mara over 24 months. You lose 27% if you bought and held for the last 24 months. So the algorithm makes sense. The problem is that if I get out, I've got to wait 30 days because I take a loss. I may get out, take a little bit of loss, be able to write it off, but I've got to wait 30 days because of the rules with taxes. But MicroStrategy was up, Coin was down. We can look at Coin. It's got that button hook. Everything that's been up is starting to get in that button hook. You're starting to lose confirmation. So the 4-hour algo is in on Coin, up 93% with this run. Got you 144%, and then it started to turn over. So if you're in this run in the algo, you could take that run and get out. Disney board. This is Disney. The Disney board aggregates backer from Blackwell. Understand, Nelson Peltz is a hedge fund guy. He's an activist. He's trying to get into Disney. He's trying to get a couple of board seats. Blackwell and other people came out today and they backed Iger. Iger doesn't want Peltz on the board. He doesn't want disruption. Disney's one of these ones where it's just getting in the news and it's a little bit messy for me, but I think anything under 90, I think you can add to it for long term. I think if they, as they start to write checks to NBC Universal to own actually Hulu, and they get some type of streaming bundle with Hulu, ESPN, Disney Plus, all of those things, I think Disney becomes a little bit more of a player. The valuation is what you have to worry about. If we go over here and we look at the Disney ratings, Seeking Alpha analysts hold. Wall Street says buy. Quant says hold. I trust that quant. If you look at the chart, it's just kind of capitulating around here. The algorithm has you out. The MACD may cross up. We may start to see a good 3 or 4% run in this. If we pull this back, let's take a look at a weekly for a long term to see where people are holding. Because again, you want to make sure that your people are holding this at a higher point, because that will typically bring the stock back up in the market. Let me see if I can grab this. There we go. And we'll pull this back to, again, March 2021. That was when Disney was trading at its highest. Do we have people holding higher? Yep. You got people holding around 100. You also have a tremendous amount. This one juts out at 173. So people are still holding. What these volume shelves show you in TrendSpider is everybody who's bought the stock since March 8th, 2021, if they are still holding, they are in this graph. If they have sold, they're not in this graph. What you want to see is a higher, basically a pull, for higher prices. Because this one's in a downward trend, you want to see that. You want to trade it. If you want to invest long term, I do think that for long term, again, this is a note from a while back. We're back at COVID levels where you're trading. So I think anything under 90, I think is good for Disney. But read up on it. Maersk and other shipping companies are pausing Red Sea transits. This is causing shipping companies to absolutely go nuts. If you want to read and see all of the shipping companies that you may want to invest in, go over here to this article. This has all of the shipping companies listed down at the bottom. Zim is the one that I noticed yesterday. I think it was up 10% yesterday. This is one that I don't think is a long-term gain. I don't think this is a long-term investment. Zim is one that I think is a good trade, not an investment. You can see from the weekly, we're still in a downward trend. It's not even an old enough company on the weekly to have a 200-day. But on the algorithm, loses you 67%. But if you bought and held Zim, you lost 80%. Your average win on this is 11%. So if you can pick the winners, you can make some pretty decent money. This one got you in at 773. If you just listened to it and at the end of November you said, hey, there's some Israel stuff going on. Maybe shipping's going to be affected and we've got some gaps up above. Well, if you got there, you're up 63% right now. 63%. So you do have a gap up here to 1354. I don't think it's crazy to think that with shipping going the way it is, that you might be able to do that. But take a look at this article that I will pin in the newsletter. It will be linked there. And you'll see ZIM, FRO, DHT. I've traded GOGL. I've traded a lot of these before, but you want to trade these because this is not something that you want to own. It's getting just a bump up. Let's take a look at SPY. SPY is TrendSpider saying 460 might get a retest on SPY. If we go and look at SPY right now in pre-market, it's at 470. You can see I've kind of traded this one. This is the 454. I'm thinking that that's a little bit better of a support level, but you might get a test. We talk about that button hook. Look at that button hook in SPY. Right now, the algorithm doesn't have you out. It got you in at 419. You're in a 13% run right now. And that was at the end of October. It got you in. The algorithm makes you 9% on SPY. If you just bought it 2 years ago, you're down 0.7%. So your average win on this is 4.75. A lot of people trade options around my algorithm, and it works. That's typically what they do. But I think this one's an interesting one. Apple got downgraded yesterday. We were down 4% on Apple yesterday. I said this before. The button hook was forming. It got you out with a 12% gain. These notes are MACD crossing down. Look at that. That was from December 20th when we were trading at about 196, 197. I said 200 is kind of a resistance level because when you change that handle, stocks tend to just get a little bit hurt from that one and pull back, especially since you're in this run. Got you out with a 12% gain. We've lost confirmation. We're down here around 184. I do think if you get under 180, this is a great price for this stock. I don't know that this is going to lead in the next year. For instance, you look at the weekly. We've just been on a run, and 200 has been that double top. Until you get over that 200, your upside is a little bit limited. And what's limiting it is the valuation. And there, we'll see in the comments from social media people on my podcast on Spotify. One of them says, "Hey, it's China." I think it is China. I think it's the iPhone. I think it's a lot of things. Mostly, it's just that they've had 4 quarters of declining revenues, and they've got their biggest grower is the services category, and that's being hit because the EU is saying, "Hey, you have to open up a new store where you don't charge 30%. Maybe you charge a smaller percentage, or people aren't giving you anything for your store. It's not the closed garden." Google has they can sideload apps and stuff without jailbreaking. So Apple, a little bit of a tough time. Am I getting rid of it? No, I trimmed up there, and I told you in December, as it was getting towards 200, I was trimming in my retirement accounts. In my brokerage account, I'm not selling at 185 unless I need money. If I want to raise more cash, yeah. Now, my algorithm makes you 32% versus a 1.7% if you just bought and held. So the algorithm, and how I use the algorithm, I use it to get into it. I don't use it to get out of it. I use it to try. I'm smart enough to know that, hey, when Apple reaches all-time highs, trim a little bit. Psychologically, you've got to trim. When it reaches a double top, you've got to trim. Doesn't mean I was getting out. Just means that I took that money out and I will add it back in when the algorithm tells me. Simple as that. There is a test list strategy that TrendSpider has put out. So if you're not a TrendSpider user, this is the same way that you get all of my stuff. You're basically going to click on this, and it's going to bring you over, and you can say login and import. That's it. Doesn't tell you what the strategy is. Just shows you it's a bear MACD cross up. Strategy performance, 103%. You gain 103% versus a 29.2% downturn just by buying and holding. So it's a significant gain here. I like it. You can I'll link it on the newsletter so that anybody who signed up can get this strategy. It's free. It's free. Just sign up. TrendSpider is not for free, but you can sign. When you sign up, you get a ton of these nice little strategies. It's great. Now, we had some upgrades and downgrades. First upgrade, Netflix. Netflix got an upgrade as a top pick from UBS. The algorithm just got you out. You're down 0.37%, 466. I would say use this 200 right here at about 430 as a decent area to get in. I think you are going to cover. I think 450 is probably going to be a support level here. I don't think this one's out like crazy valuation wise. If we look at Netflix over here, it's got a 46 PE. It's got a 29 forward PE. But they are the leading streamer. And I don't think that you're going to see a huge downgrade on this one. If we look long-term, I'll look at long-term on the chart. But I wanted to go over here to, no, I don't want influx. Netflix. Oh, I got to auto-correct. Netflix right here. We'll look at the quant rating. Seeking Alpha Analyst, buy. Wall Street, buy. Quant rating is hold. And it's based on the valuation. I don't think it's crazy. The quant does. If you look at a long-term on this one and we go to a weekly chart, you can see we're 47% from the all-time highs. So you just got above that 200-day. That 200-day is at 424. If we are going to get a golden cross of the 50-day up on the 200-day, you're going to see this one take off. So I like this one. I really do. The other top pick for 2024 from UBS is Disney. So we just talked about Disney. That's good one to know. ROK upgraded. ROK is Rockwell upgraded at UBS, and they said they give it a $360 price target. If we go over here and we look at Rockwell, it is a specialty. It's an industrial. 25 PE, forward PE of 21. That's high for an industrial. Year to date, yesterday it was down 1%. Performance over 1 year, 18% up. So the average target price is 302. You're trading at 306. But they just upgraded it. If we go and we look at Rockwell, you can see UBS upgraded. 360 is the price target. Upgrade December, Wells Fargo said 357. So the most recent ones are up there. You can see August downgraded. Barclays downgraded them from 300 to 287. You're trading at 306. So if you know anything about industrials, do that one. Downgrades. Now, Oxy. Oxy got downgraded, and it's based on valuation, and it is expensive. I am still holding Oxy. I did not get out of Oxy. Over 1 year, you're down 3.57%. The PE is 13. It's expensive. You go over to Exxon, and their PE is 10. Oxy's, again, energy doesn't get a huge valuation, but at 13, this may be the Buffett effect where Buffett just continues to pour into this. Look, that's all buyers. And where are they buying? At 60, between 57 and 60. And it's trading right now at $59.77. I still think that $60 price point comes in. The other one that was downgraded, ironically, is Exxon. And the reason they were downgraded is just because oil and energy, they don't think it's going to have a good year. It's going to be tough. Even with the Middle East going on the way that it is, oil prices haven't spiked. They just haven't. We can go over here to FinViz, and you scroll down in the bottom left, you'll see crude oil up 1.35%. Now, natural gas, I went over it on YouTube. You can check out the Boyle chart if you want. And if you want me to look at it, just type it in it and let me know that you want me to look at it. But Schwab is another one. That just got downgraded. Now, that got downgraded from Goldman just based on the run that it's on. And the run that it's on right now, just in the algorithm where it was 51, and I said, hey, at $50, you should absolutely get this one. Over 68 days, 36% in a A-class name. The other one that closed at a top yesterday, but this one did get downgraded. JP Morgan closed at an all-time high yesterday. And if you take a look at the algorithm here, right here, that's 22% over 62 days. Now, if you trade JP Morgan in my algorithm, you make 12% versus 6% if you buy and hold. I don't necessarily like JP Morgan. Jamie Dimon, I think, knew exactly what was going on with Epstein, so I'm not a big fan. So there's your downgrades, upgrades. I've given you a ton of plays. Let's go into the social stuff because I got 12 stuff to go over here in social stuff. This came along with a Venmo gift, and if you want to, you can click down here if you want to gift me, because I do a lot for you, and you just want to say thank you. I don't care if it's $1. Basically, I tell people, if you make money off of anything that I do, just gift me. With Venmo is my preferred, PayPal second, Cash App third. Just gift me in those things. And you don't need to give a gift, but when you give me a gift, I know that you made money. It makes me feel happy. I don't care how much the gift is. Doesn't have to be, over the top. But this particular person gave me a gift. It was private, so I'll keep the name private. But thank you. I appreciate your generosity. Happy New Year on me. Any issues with having 120 stocks in my Fidelity portfolio? I've built it over the last year with play money with the strategy of buying only dividend stocks on the dips and holding them long term. So far, I'm beating the S&P by 1%. Thanks so much. So I don't think beating the S&P is fine. I mean, the S&P by 1%, you could buy SPY, and own 500 companies, or you can manage your own 120 stocks. I think the time that you put in there, probably not worth 1% to me. But if you want to build, again, you guys know I say this all the time. Dividend stocks to me are a way to raise cash. That's the only reason to get into dividend stocks. Typically, dividend stocks that pay a high dividend don't have a lot of growth. So you're actually giving up your growth in order to get the cash. Energy stocks are a perfect example. Typically, they don't grow. You're not trading energy stocks. There's not big swings. But I do think that having 120 stocks, back to the focus, it's too much. If you think of the S&P, Standard & Poor's, they have hundreds, if not thousands of employees managing those 500 stocks. And looking at those 500 stocks and analyzing, should we pull one out and put another one in? There's a lot of discussion that goes into that. There's a lot of analysis that goes into that. Making sure we just talked about how you're seeing button hooks on QQQ, how you're seeing button hooks on other stocks, button hooks up, button hooks down. That's a lot for me personally to be able to track. I like, the reason the core portfolio has 35 names is that's kind of my top. Preferred for me is 20, because I think with a full-time job, I was traditionally able to look at 20 stocks and be able to know, okay, I'm beating the S&P, I'm beating the Qs or meeting the Qs with this portfolio. And that's 20 stocks that include QQQ, that includes the ARK funds, that, over history, it includes SPY, VOO, things of that sort. It included all the ETFs, XLK, XLY. So I was able to manage those, and I was able to basically maneuver cash. I just think that if you have time to do 120 stocks, I don't think it's too much. If it makes you feel, comfortable, again, we talk about this all the time. If you sleep at night and you have 120 stocks, that's fine. Just understand, in a downturn where you want to protect your capital in a quick downturn, like COVID, are you going to be able to maneuver 120 stocks? Because if COVID happens again, remember, that's why my algorithm is there. It was built during COVID. I didn't want to suffer a 40% downturn overnight, over a week, and not know how many stocks I have that I should get out of. When should I get out of them? Blah, blah, blah. That's why I wrote the algorithm. And so my suggestion is, if you can manage something and you think you can manage 120 stocks through a 1 week, 10 to 20% downturn, have at it. It would be beyond me to say, hey, that's not right to have. But me personally, I'd probably want it around 20. Again, when I was working, I have 35, I think now, but I don't have a job. This is my full-time job. And it takes a full-time job. So Jonathan from Spotify asked me, BG, is it a good investment? Let's say BG, Bungie Limited. Bungie Limited, chart doesn't look horrible. Got you in today at 101.67, right under the 200-day. The death cross here does worry me right around earnings. Looks like it kind of just capitulated, went up a little bit. It's trading down today about 1% at about 151. Let's look at BG and FinViz. They are consumer defensive. Farm products, nothing exciting. PE 7. Dividend is 2.61 average. Target price is 135. We can take a look at that. A lot of that's older. Most recently, 122. June, 138 by Roth. If we look at insiders, August, they sold $2 million at 111. That was the co-president, agribusiness. I don't think there's anything wrong with it. Doesn't excite me. I'm not an expert in that particular area of farm stuff. If we look at Seeking Alpha and we look at the quant rating stuff, we can see that it's pulling it up right now. Man, it's slow. Seeking Alpha analysts, hold. Wall Street, buy. Quant, hold. The valuation is an A-. The growth is an F. Like I said, I don't think it's growing, but you're getting 2.61. Profitability, B. Momentum, B. Revisions, B+. You can see buy. Those are from October, August, June. The most recent one is hold. Bungie goes ex-dividend tomorrow. That was from November 15th. Not a whole lot of news. I mean, it's farm. So farming, you need it, but it's not going to, you're not jumping from 100 to 200 because of AI in the next, year. So whether it's a good investment or not, I don't think it's a bad investment. If you look at the long term on this one, let's just take a look at a weekly. You see, since COVID, this one has just been, if you bought at the low of COVID at 29, you're up 246% in 3 years. That's not horrible. But when you go back, it's a fairly, here's the all-time high at 126, your upside. I just don't think your upside is there. For me, I'd rather invest in tech with the upside. But it's a personal decision, Jonathan. I'm not going to talk you out of it, but I just, there's probably better places for me. Bisco, thank you for taking the time to answer. I'm probably going to give the algo a try for 2024. I'll reach out via Substack when I pull the trigger. Bisco asked me about the algo and what I mean, getting in and stuff like that for a buy and hold investor. Is it good? Again, I'd tell you, Bisco, make sure that your portfolio is big enough. The algo is not the only reason to get TrendSpider. You have to be, it's not a plug and play. Understand that the algorithm is not plug and play. You have to set up your screen in TrendSpider. It doesn't come just automatically, oh my God, I'm going to press a button and this tells me when to buy and when to sell. You have to understand MACD. You have to understand moving averages. You have to understand charting. If you're just expecting to kind of get into TrendSpider and plug and play, it's probably not going to be a satisfactory experience for you. So while I commend anybody and I tell everybody, hey, get the tools that allow you to do it, charting may not be for somebody who just, if you want to just plug and play, I would say get Seeking Alpha and look at the analyst stuff. And when it gets out of quant rating, set alerts in Seeking Alpha. You can set an alert for quant rating. You can set an alert here, quant rating right there. You can set an alert. It'll basically, alert you for your 20 stocks or 15 stocks or even 120 stocks as to, hey, when it gets a downgrade from the quant, I want to get out. Or, when it gets an upgrade from the quant, I want to get in. So I'd probably, again, you have to understand TrendSpider is more of a charting platform. It's not necessarily a plug and play kind of thing. Chris McLean, when you talk about the algorithm gets you in, the algorithm gets you out, can you please do a tutorial on what you mean by that? What tool shows the algorithm? How do you follow it? Well, Chris, it's TrendSpider. And when I talk about gets you in, gets you out, it is an algorithm that is based on MACD. There are some moving averages in there as well. When we developed this one, it was myself and my buddy Steve. We developed this. It was around COVID. So COVID came. We saw the downturn of 40%. Both of us in our portfolios, we had just left work. January 2020, I had left my working career and I retired. And I said, I want to trade stocks. I want to do this. I had a good enough Understand, I had a good enough portfolio that I was able to leave work and I knew that I was good at trading stocks, so I could do this type of thing. But I wasn't heavy into charting. I was lightly into charting. I got heavier into it. And so the algorithm, you can see it. When it gets you in right here, you can see the white. When it gets you out, you can see the green. Now, if these are losses, you'll see, fortunately on Apple, we haven't, you can see, there was one right here. Got you out with a red one. So it gets you in, gets you out. It doesn't mean that it places a bot. If you want to trade it as a bot, TrendSpider will allow you to launch it as a bot. I do not. But when I see this, like in Apple, right now I see Apple got me out with a 12% gain, right? That's simple. You buy at 171, you sell up here at 194. Simple. Gets you in, gets you out. That's the algorithm. It shows you on the screen. Doesn't automatically buy for you, doesn't automatically sell for you unless you launch it as a bot. TrendSpider allows you to launch it as a bot. Personally, I don't want the algorithm making my decisions for me. I want to make decisions myself. So I don't launch it as a bot. There are plenty of people in TrendSpider who do bots and do very well with bots under different strategies. The algorithm is just a strategy. And what TrendSpider allows you to do is backtest the strategy. And when we backtest this on Apple, and you're just seeing from May of this year until December, that's it. But when we backtest 24.3 months, and it's right down here in the bottom right, 24.3 months, the algorithm gets you in and out 26 times during that 24 months. So it's not like you're constantly trading. Once a month, maybe twice a month. So you're not constantly trading, but it gets you in and out. It's just a way of understanding, hey, the algorithm says this stock based on charts. Remember, the chart doesn't know fundamentals. The chart doesn't know that the iPhone, is not selling in China. It doesn't know that the valuation that an analyst said, hey, I'm going to downgrade this stock because of the valuation. It knows nothing. It takes emotions out of the trade. So Chris, I'm not going to do a tutorial on the whole algorithm. The algorithm is basically you import it. When you sign up for TrendSpider, you go over here, you go to the link tree, you sign up for TrendSpider. You get to, once you sign up, I think it's still under $400. Let's see. I think they still have that going. If you pass up on the 7-day trial and you just go for a year, it's $397. And you want this middle elite tier. But if you go over there, what I do is I send you basically go over there and then you go back to the link tree and you email me. My email is right here, dailystockpick3@gmail.com. You email me and I email you back a welcome letter and you import the strategy. That's all the algorithm is a strategy. It doesn't tell you anything going forward, just tells you about the past. But what you want is a strategy that is back tested. If you do a strategy that is not back tested, you don't know if it's going to beat buy and hold. You don't know if it's going to beat the indices. You don't know anything. So you follow it by signing up for TrendSpider. But you can also sign up for my newsletter for free. Again, if your portfolio is a little bit smaller, if you're just starting out, the newsletter is the free place to go. And you have plenty of free tools. FinViz, you have Seeking Alpha, which is free. You don't have to sign up for the premium of Seeking Alpha. You can sign up for free. Plenty of tools out there for free, but the algorithm is proprietary to me. It is something that I share with the audience that signs up for TrendSpider. I'm an affiliate of TrendSpider. I think if you ask anybody in the audience who has signed up for TrendSpider, I think 99.9% re-sign up after the first year. So it is a tool that I can't trade without. J-Web, hey Gary, can you please look at VIR Biotech for 2024? VIR. Now, understand, J-Web, I am not an expert in biotech. Here you're seeing it cross up. You may have a golden cross from a chart. The algorithm loses you 81%. So ironically, in this one, you lose more than if you just bought and held. So we've had some ups and downs in this one. Right now, you're still in a downward trend with the 200-day. You do have some confirmation. I can't tell you what it's going to do in 2024, but let's go over to FinViz. Again, free. Free for you to look at. They're losing $600 million. They have 133 shares outstanding. Let's just see how much cash they have. What's 133 million times 12?
Yes,
They have 1.5 billion. So they have 2 years of cash. So you shouldn't see a dilution anytime soon. 2 years of cash. I mean, I don't know what they do. Year to date, yesterday it was up 0.77, but over a year, you're minus 59%. Most recently, September, downgrade, buy to neutral, $14 price point, and you're trading at 10. Your 52-week range, you're 31% above your $7. You're 67% below your $31. If I go and look at insiders, nobody's buying. Nobody's buying. Everybody's selling at 25. They were all selling at 25, and you're at 10 right now. So nobody's buying at 10. That would be how I would look at it. I don't know what he's going to do in 2024. Biotech is just one of those areas that this could be a $50 stock. Right now, the rating summaries in Seeking Alpha, strong buy in quant. Momentum D, profitability B, valuation B+. So the ranking in industry, let's see, 404 out of 518. I think there's plenty of others that are far better than VIR. And you can look at it. CASI, IVVD. Look at the quant, 4.98. So this is 518 biotechnology stocks rated by the quant rating. I think you can find better places. And again, this is part of why you should sign up for Seeking Alpha. I like Seeking Alpha in that particular sense. Dex from Spotify. Since BITO was up 8%, what's a good price to get in? I ain't going to tell you what time to get in. I can't tell you what price to get in. But I can tell you here, the algorithm got you in today at $21.87. Do I think it's a good one? It's trading at $20.55. It's down 6%. I do think that there's a gap here down at $19.44. I think with ARK buying BITO, I think this one is a solid. If we go, that's the thing right here. If you bought January 2023 for the year, you're up 98%. So I think you still have confirmation. Again, that gap is down at 1942. I'd tell you under 20. If you're interested in the BITO, Bitcoin strategy, this will probably become a Bitcoin ETF, spot Bitcoin ETF. Your RSI is a little bit high at 64. You're above that 50-day. The 50-day is moving positive. Bitcoin has everything moving positive except in the short term. It's pulling back because it has had such a run. But the ETF was a catalyst, and it was expected to be a catalyst. It was a catalyst. I don't know if that one's over. But for me, BITO, anything under 20. Now, if you look at the algorithm here got you in at 14. Got you out with a 41% gain, but it got you right back in. So, again, I don't know what is a good price to get in, but I do think that it's one that ARK is buying. BITO is the one that ARK's buying. So I trust Kathy Woods. Happy New Year. I like Amazon and Google into the next year. What do you think would be good prices to get in? I've said Amazon, anything under 150. I think at this point you're fine. I think anything 140. If you got, earlier in the year, I said 130. Earlier last year, it was under 100. I don't think 150 is crazy to get in. I've talked about this a lot with Amazon. Look at the weekly. You're still 13% from the upper part. You still have people holding in the 160s from a while ago. So you've got the upward trajectory. And I think Amazon's a better business today than before. With Google, I think Google is one of those where they're going to lose money on the search because it's more expensive using AI and Bard. I think anything under 140 is fine. I think anything under 130, I think load up the Brinks truck. I'm adding in at 130, but I have a ton. I have a ton of Google. I have a ton of that grade 8. I still have a ton. Fatima, an important point that you're missing with Apple is China. China is buying less and less Apple products. Hawaii is doing a great job with their new iPhone. With their new phone. Also, iPhone 15 sales are sluggish. Yeah, I'm not missing that. I just, they're buying billions of dollars of stock back. And what I don't think that China is going to, it's 15% of their sales, I believe. If they go to zero, then that's going to hurt them tremendously. But that China story has been in this stock, that it's too expensive for China. They're developing lower cost ones for India. They just started producing the iPhone in India, which if you don't think that's going to give them a bump, that's crazy. I mean, India consumers are a little bit more on the conservative side with phones than Apple. Apple just is a status symbol in India. And if you've ever been to India, you know status symbols are very important to Indian folks over there. So I'm not missing it. I just don't think, I'm not listening to the bears. I'm not getting out of my position. I trimmed it. I'll get back in. I'll use that money to get back in. JDB28 from Spotify. Thoughts on Square? 50-day crossed up on the 200-day on the, but it's still dropping. What's a good buy? Also, do you use stops at all? If I'm trading, I'll use a stop. But I haven't traded. You guys take up a lot of my time. So in the mornings, that's when you want to trade. You want to trade in the mornings. The volatility is there in the morning. I do this podcast in the morning, so it's hard for me to trade. Now, I will get into SQQQ later, but as far as Square goes, I own this. And I own this at a significantly higher price. This is right here. This is the weekly. You can see the 200 days just moving around that 129. In my mind, I think with Bitcoin, with everything that's going on with that, I think Square could take advantage of that. They're not making money. They are down 10% yesterday. This is because you got this double top here at 79.80. That clear is going to be a resistance level. As far as the algorithm goes, we can look at the algorithm. It loses you 7% on this stock, but if you bought and held, you lose 54%. You can see the button hook. So am I getting in right now? No, you got gaps below here. I would say probably 55 is a decent support because you broke that 50-day. Your next moving average is that 200. You had this golden cross, which if you just would have bought on the golden cross on the 4 hour, then right now you're still up 10%, but you had 26% in this. If we move to the daily, I think you're right. The 4 hour does, it looks like a golden cross is coming. That probably signals that this bottom $52 price gap is not coming into play. I would say that $60 here on your daily is probably going to provide some support. But look at this. If we let's pull this back, these volume shelves back to a higher price. If we just pull this back we're going to pull this back to March 29th, 2022. Nobody's holding on from these higher price points. Everybody's, adding in during this run. So those higher price points, you're not really getting a volume pull up. And so when you're seeing this, let's see, we're going to put this right about here. We're going to put this at about 87. $80. You had this double top from July to here, kind of rejected right there. I would say $87 is probably the next, $90 is probably the next double top that you're going to see. So I'd wait until you have confirmation on whatever chart you're looking at, whether it's a daily, whether it's a 4 hour, whether it's a 60-minute. Wait till you have confirmation. Right now, it's just in that downward trend, and it's because it had that year-end rally. Everything that had that year-end rally is just getting killed. Microsoft from Queen on Spotify. Microsoft, I think this green line represents the path to $600. I think when it's under there, I think you can buy it. It's extended. The algorithm has you in at 372. You're trading at 372 right now. It is capitulating. Those Bollinger Bands are cinching up. I would guess the next move would be down in Microsoft just because we've lost confirmation. The Bollinger Bands are cinching up, which tells me that a move is pending. And I think this 330, 340 gap right here that's been filled, but I think that moving average probably comes down. So I wouldn't necessarily get into Microsoft until we have some type of confirmation that we're moving higher. Champ Miller, I recently came across Allogene Therapeutics. They are a cancer research company. Let's see, Allogene. He didn't give me the ALLO. Let's look at the chart. Downward trending 200-day, upward trending 50-day. You've had quite a move here. You've got some confirmation. The candles are not great for me, but you do have confirmation over that 9-day. Investment, I don't know. I mean, your guess is as good as mine. Go over here to FinViz. They're losing $332 million. Do you want a company in something as capital rich as cancer research that's kind of just a hope and a prayer? Their average target price is $12.79. Looks like $7 in December. Citigroup said buy. June, Oppenheimer said $28. It's a huge spread. Anybody buying it? Let's see. They're selling it. They're selling it at $2.70. Nothing huge, but it's a small company. I mean, it's only got 144 million shares floated. Investment, put some money into it if you like it, but it doesn't excite me. Bio stuff just doesn't excite me. The tech does, but biotech, it is significantly a risk. 1 in 10 probably makes money. So you when they're losing money, you can bet on them, but that's just what it is, unless you have some insider information. I come from Land of Lizards. We learned that is from a Fish song. So edible. High five to you. Your thoughts on DB? Appreciate your so. Let's see. DB. This is Deutsche Bank. This with all the other banks has come back. Again, I kind of, for banks, I like Bank of America. I own Wells Fargo. I own Citi. I own Morgan Stanley. I own things like that. Deutsche Bank, I think it's fine. I think right now you're seeing that button hook, so I don't think I'd get into it right now. If we just look at Deutsche Bank here in FinViz, we can see 5.41 PE. Nothing crazy. This is at German Bank. So you're not even investing in this country. You're investing in, I don't know enough about banking in Germany to say it's a great buy. Over 1 year, you're up 15%. They pay a 3.6% dividend. Average target price is $14.66. Most recently, nobody's had a price target. So you can see they go equal weight, buy to hold, no price target. Nobody's really doing any insider information. Let's see about DB in Seeking Alpha. A+ valuation. Wall Street says sell. Seeking Alpha analyst said buy. I mean, you just got a mixed picture. And I don't know enough about banks to say it's a great one. So, do your own research. I will include, I did a scan of core portfolio stocks that are under the 200-day that might provide a pop. Those are Disney, Bank of America, and Shopify. Dow stocks that are under their 200-day that may provide a pop as well. J&J, Nike, 3M, Disney, Verizon, and Walgreens Boots. So I did want to do that, but I'm going a little bit long, so I just want to shorten up the show. Scans. These are stocks, just so you know, that show a bullish tendency in my algorithm. 102.40 right there on Exxon. PXD had a 1-2. One that I found interesting is the short of ARK. So ARKK, this is SARK. This is a short. You're seeing a gap fill probably up to 28.53. This is up 2% today. You're seeing a MACD cross up. This, when ARKK goes down, this goes up. And ARKK has been in a legendary run. You do have confirmation on this. It's above the 9-day now, 26.53. Your MACD is way low. This was oversold. But understand the ARKK was just in a run. I'll include this. BITO, we had that question earlier. What's a good price to get in? Algorithm says to get in at $21.87. You're trading at $20.60. So, based on volume, I'd probably look at anything under 20. But I do think that with ARK buying this one, I think it's a good look at that, slide of the MACD. While the stock's going up, the MACD has been going down. The RSI is in no man's land at 56. So I think those are two good ones. We talked about AbbVie having a potential weight loss drug and how this one hasn't taken off like Eli Lilly. Eli Lilly isn't in the core portfolio. Well, this one, you can see this MACD. It gets another bullish cross up here on the MACD. The RSI is at 81. I don't know that I'd necessarily get into this one. We were talking about this one at the 130s. It's at 160 right now. This one, again, weight loss drugs are going to be huge. You can see on the weekly, on the monthly, you have MACD cross up. You've already had the MACD cross up on the weekly. Again, it's bullish. Your all-time highs here are 178. So that one had a cross up as well. So there's a lot more. Subscribe to the newsletter. Remember, if you're not subscribed to the newsletter, you can go to Linktree, sign up for it. Any of the links that I have. If you want to sign up for Seeking Alpha Premium to set those alerts, like that kind of stuff, you can sign up for Seeking Alpha Premium. Webull. You can sign up for Webull. I put $1,000 in there at the at the beginning of last year. I'm at $37.65. I am losing a ton of money off of Apple right now. I'm down, let's see, for the day, 0.52%. Cat has pulled back. That's down 2%, ironically. Snap, we talked about Snap. I was in that run on Snap. I'm down on that one. I'm just going down my portfolio in Webull. And it's not many stocks because I only have $4,000 in there, so I've got it pretty spread out. You can see this is just Snap. I said, when do you get out? Well, you can see the button hook, and you can see we lost confirmation. Up here when we were trading at about $17, that was extended. The MACD was super high. It's overbought since October. The RSI is coming down. At some point, you're going to have an opportunity to get back into this one, but you've got gaps all the way down. So Snap is down there. Boeing, I'm down. Palantir, I'm down. Overall, Palantir, I'm down 13%. I bought TQQQ at the end of last year. I'm down 5% overall on that one. I do think that SQQQ might be the play. Google, Coke, Procter & Gamble, Starbucks. I've got a ton of stocks in there, just not many shares of each. So if you have any questions, hit me up. Again, I would say take advantage of that TrendSpider. Start your year off right with the tools that you need. Follow me on any social medias, and thank you for listening. I appreciate it. I'll talk to you again tomorrow. Take care. Bye. Okay. Scott. Coke broke 60? Let's see. Yep, $60.03. Time to start trimming that one. Hold on, I'm getting... texts. I gotta take my computer back. What about Webull, Scott? I love Webull. I like trading in Webull. I just have no cash in Webull. I didn't sell out. I'm gonna sell a bunch of that stuff now. In fact, let me see. I think let's see. I keep spinning. Webull sucks. I like the game of Webull. It does seem like a game. Okay, let's see. Claim all. Oof. Why is it doing this to me? Okay, Steph, hold on 1 second. Let me just finish this. I know I'm quiet. I'm trimming some stuff in Webull. It's just Apple and Snap. I should have trimmed it before, but okay. We will look at Weeble later. Scott, you can do extended hours in TrendSpider. Is that what you're talking about? Seeing pre-market? Here. Let's just go into your settings right there. And Steph, I will look at OGN. But go into your settings and then data, do extended hours. That's it. So here, we'll look at even on the strategy tester, you can look at extended hours. So let's look at one that maybe trade. Let's look at Snap. Here, the algorithm, you can kind of look at it. I don't try not to use the strategy tester in extended hours because I think extended hours are a little funky. But go into the tool there, the wheel, go to data and display extended hours for equities. When you use if you go into strategy tester and say we choose the 4 hour, and let's look at Apple, for instance. So Apple, for instance, in the algorithm, that's the MACD. That's not the 4 hour. Let's look at the 4 hour. The MACD actually performed really well with Snap. But so the algorithm makes you 32% over 24 months. And it's 1.7% if you buy and hold. That's essentially what you're looking at. If you click this extended hours in the 4 hour algorithm, this changes tremendously because it only does 12 months. And extended hours, you make 36% in the algorithm. And you make 46% buying and holding. So I don't try not to use the extended hours because I don't always want to look at, it doesn't seem to work for me. Because I'm not up at 5 a.m. trading. I'm not, trading at 8 o'clock at night, things of that sort. Let's look at OGN. Organon and Company. $11, the algorithm got you in. Like Joe said, I think that's where he probably looks to add. You can see that MACD cross up, solid move. That MACD is pretty high right now, and the RSI is at 68. Let's look at some of the fundamentals of this one. They have a PE of 6.31. They're a drug manufacturer, $585 million of income. $3.68 billion. They have enough shares, 255 million shares outstanding. Dividend solid, 7.79. Performance over 1 year, though, 48% loss. Your average target price is 19. You're trading at 14. You're kind of midway between your 52-week range of $10 and $32, but your trend is seriously down. Most recently, Goldman downgraded them to $16 from $33. So that target price is probably a little bit wacky just because some of these are older. If we look at some insiders, they're just exercising options. Nothing crazy. So OGN, let's look at OGN in trends in, Seeking Alpha. OGN. This is buy from Seeking Alpha Analyst. Quant says hold. In the industry, it's 146 out of 204 in healthcare. The number one in healthcare is Third Harmonic Bio, THRD. We can look at this one. Strong buy, THRD. Third Harmonic. Look at that one. Poofa. You're in at 6. You're up at 10 now, but you're getting that button hook. So, yeah, Joe's right, Steph. I think you add small in that one. I don't know anything about the future of it. That's what I'd be worried about with a downward trending stock with a high dividend. If their earnings are not keeping up, and that dividend gets cut, that's where you get screwed. I mean, look at that $1.11, $1.31. Their earnings here in TrendSpider. Let's move to a monthly, or we'll go to a weekly. Look at that, $1.72, $1.67. As the earnings have moved down, the stock has moved down. So I don't know what changes that stock to move back up. But as the earnings move down, that dividend's going to either need to be cut or shaved, or they're going to continue to, greatly. Now, the algorithm on OGN makes you 9% versus losing 51%. This is a great one for the algorithm because if you look at it, you've been kept out of a lot of these downturns in the algorithm. You haven't necessarily won a ton. Over 24 months, it's 27 positions. You only win 41% of the time, but your average win is 8.3%. That's the sign of volatility. And if you just look at it, January of last year, I mean, this didn't participate in last year's run at all. So, yeah, Scott, when you have I'll just tell you, when you have an issue like that, if you ever have an issue like that where you can't find something, down here in the bottom right, there's a contact us. And you're not seeing it because of my overlay on the screen. But in the bottom right, you'll see an orange tab that's contact us in TrendSpider. Type it in there. Even that after hours thing. Say, hey, I need pre-market. Can you tell me how I can see pre-market in stocks? And they'll just answer. I mean, they are tremendous. People ask me, well, why didn't you go with TradingView? TradingView is the big boy, and they have much more ability. Well, I was new to charting. I needed a little bit of help. TrendSpider has since created tools that are better than TradingView in my mind. And I had this contact us button. So when I was developing the algorithm, me and Steve were like, okay, what do we do? In fact, it was funny because I tell this story a lot. We went up to the candles and here I'll run. So if you go to Apple on my algorithm, okay, we make 32% versus a 1.7% return over 24 months. Here's the killer. If you go to a Heiken Ashi candle in here, and you run this algorithm, well, it still does. No. Oh, I've got to change it in the algorithm. Yeah, that's it. So if I just go to Heiken Ashi, this is the killer. So 24.3 months, your buy and hold is 5.9%. Apple, buying and holding on Ashi candles, Heiken Ashi, it makes you 106% over 24 months. That's crazy compared to just a generic open high, low close, just the generic one, which makes you 32%. And we were like, well, why does Heiken Ashi, do 103 times the amount? And TrendSpider was able to help us. Oh, really? Maybe that's because it was a fairly easy answer. The other thing you can do is blog. We'll just go here. If you go over here to TrendSpider blog and you go to there is a way to search the blog. Let's go to TrendSpider University. Yeah, TrendSpider U. View all. Deep dive cases, core capabilities. Yeah. I would contact support. Let's see. Yeah, I think if you use this contact us up there on this page, I think it's going to lead you to the bot. Every time I've ever used the contact us down here, they may have changed something though. I didn't get to virtual help. But the other thing you can do, Scott, is just tweet them. They're really good about getting back to you on tweets. They're fantastic on Twitter. Their support. So, okay, I am going to, hold on. I'm going to just grab my computer. Oh, I have to move. Let's see. We're going to move to trash. And then we're going to open this up. Downloads. And I'm going to get this. Morning, Sherry. Boom, boom, boom. Where are the two? There they are. And we're going to share. AirDrop. Oh, you son of a bitch. Ugh, okay, I gotta go. I gotta fix this. I don't know why. This computer, it's getting a little bit long in the tooth. And the Bluetooth module doesn't seem to... I'm gonna wire it in. Let's see. Oh, don't get caught on there. This is what always causes me problems. Turn off. Turn on. There we go. Connected, connected, connected. And there we go. Share. AirDrop. MacBook Pro. And you know me. I am not going to It's got confirmation. It's down one. I have it down as down 1.24%. It's up. I mean, look at that confirmation. You guys can't see. I'm blocked by the AirDrop window. The algo's got you up 14% in 20 days. Scott. I've got a video that I still have to post with Jason. Okay, you have my... I think if you go to my YouTube channel... You know what? I didn't even freaking monetize this mofo. Let me monetize this. Do content live on sent save. I'm gonna monetize this mofo. After nobody watched commercials. But if you go to my channel, I'm gonna close this down. Usually up here, what I need to do is, okay, I'm going to create a playlist for TrendSpider. I'm going to create a playlist for TrendSpider. And I'll put the video that I did with David. This is it. If you've watched this one already, this kind of teaches the overview of stuff. But TrendSpider has a channel as well. And if you go here, and in fact, Jason has office hours during some days as well. He will answer any questions that you have. Set the alerts for TrendSpider for when they go live, because Jason does a great job of answering questions, and there's usually only like 5 people in there asking him questions. But this is an amazing, you can look at their playlists. This right here, I like those. I like these, non-technical tools charting. It's a little bit older, so the screens may look a little bit different than what you're seeing, but it helps you understand kind of where they are, looking at the basic stuff. Now, the other thing, Scott, is that TrendSpider has a Discord community as well. Let's see. What does this lead you to? Yeah. So if you, let me see. I wouldn't schedule the one-on-one training. Schedule a help session. You can book a session here. Let me see. Do they charge now? I think Dan was basically charging for this. Here, 15-minute office hour session. There you go. Scott, use that link. And let me know. Don't tell him I sent you. But I think book a session for 15 minutes. Have your questions. Book a session for 15 minutes on Zoom with a TrendSpider expert to help you figure stuff out. They used to do this. I don't know if I just tapped into something that they're not doing. But I'll tell you, I do not, and I say this a lot, Scott, I don't use half of what TrendSpider has out there. I find it overwhelming at times when I look at like unusual options, when I look at some of the new stuff, when I look at their insider stuff. I think there's easier places to find that information that I'm just used to, like FinViz and Seeking Alpha and stuff. I mainly use it for the charting. And the moving, I haven't found a place that's easier for charting and stuff like that. Wow, look at Lily. Whew. That's resuming its crazy run. Yeah, if you bought in the algorithm, Lily, what are you up, 4%? Close to, 4.3. But I would not, how do I say this kindly? In my mind, TrendSpider has its strengths, and I tend to use those strengths. Where it has weaknesses is all of the other ancillary stuff that it kind of clouds my mind, and I try not to cloud my mind with too much stuff from TrendSpider. So I'd book that session, like I said, in the office hours. Also, go over to their YouTube. Hey, and ultimately, you've been here long enough. I try not to be a douche who sells you a bunch of stuff that isn't worthy. The stuff that I give, that I sell, that I partner with, meaning, right now I'm only an affiliate of TrendSpider and Seeking Alpha. Those are tools that I use. And I think the newsletter, I think that provides you a great tool. And I don't think that I charge too much for it. People who got in early definitely are getting a bargain. I don't want to raise anybody's prices because I do think if you got in early, you supported me. So I'm incredibly happy for everybody that supports me. And I started this. I'm not making a fortune at this. So you guys know, maybe at some point I'll tell you guys how much I made last year. It's minuscule. You can't make a living doing what I do. I do it for the fun, and I do it to help people. And like I got 2 tips from people yesterday, 2 gifts on Venmo, and everybody was, that's what, like I said, I don't care what you give me. It could be $1, but it makes me feel good that I'm actually doing something beneficial. But I do charge for stuff just because, I've often learned, and I've found in my own personal life, if you don't charge for things and you give them free, they tend to not have value to the receiver. So, yeah. Yeah, Mike, you've been a supporter. Thank you so much. But I do have some 2024 stuff to go over. I want to travel more. So, and I said this throughout last year and the year before when I was starting out, is that the best tool for you is the tools that I use. You guys see, and I put this out every day. Every day I do the same damn thing. And if you have TrendSpider, you can do it. You don't need to listen to me. I know I've got some type of, mojo, some type of secret sauce, but I scan scan all my custom lists, core investments, covered call ETFs, energy names, levered ETFs, low cost Vanguard, spider sectors. I scan those. I also have my own personal watch list that I don't publish. All of those before that I mentioned, I publish and I give you when you sign up. The others I don't publish. The not owned one, I don't publish because it's riskier names and I don't want people thinking that, these are stocks that you could absolutely get into, because a lot of people, they're newer to this. And I try and protect people from, blowing up their accounts. That's why I see a lot like Ricky Gutierrez. That dude, he's throwing out, I made $50,000 in 10 minutes. Well, the dude is trading $500,000 to make $50,000. Who's putting $500,000 into a trade? That's a flexor. That to me is the douche that you want to stay away from. And he's not teaching you strategy. He's just saying, hey, follow me into trades and you'll make money. It's not teaching anybody anything. That's Jim Cramer. So, okay, I'm going to edit this together. I will talk to you guys tomorrow.